Welcome back to Skytech-Lens. Today we're tackling a seismic shift in American manufacturing. John Deere moving part of its production to Mexico. The company calls it a strategic expansion to stay competitive, but critics, including Donald Trump, call it a betrayal. Trump's response? Threatening a 200% tariff on Mexican-built beer if he returns to office. This isn't just business, it's a flashpoint for American jobs, patriotism, and the future of manufacturing. Farmers, lawmakers, and investors are all on edge, watching the fallout. Is Deere abandoning its roots or making a smart play to survive? Are Trump's threats real solutions, or just political theater? Let's break down the 5 key insights behind this high-stakes standoff. What's really driving Deere south? It starts with a $55 million investment in Monterrey, Mexico, a manufacturing powerhouse with skilled labor and logistical advantages. Deere faces rising U.S. labor costs and worker shortages, making it tough to compete globally. The talent pool for specialized manufacturing is shrinking, and supply chain headaches since 2020 haven't helped. By moving closer to suppliers and tapping into Mexico's workforce, Deere aims to cut costs and build a more resilient supply chain. Lower operational costs in Mexico mean Deere can stretch its investment further and keep products competitively priced worldwide. Deere isn't alone. Caterpillar and Ford have already set up shop in Mexico. This move is about keeping pace, not leading the charge. Deere insists it's a limited shift. American factories aren't closing, but some production is moving from Iowa. They frame it as an expansion, not an exodus, hoping to secure their long-term U.S. presence. But for many in rural America, it feels like a crack in a once-unbreakable bond. Some farmers and business owners see the economic logic, even if it stings. They know Deere must stay profitable to keep innovating. For factory workers and their families, though, it feels like betrayal, a slippery slope that could lead to more jobs leaving. The emotional response is powerful, fueling political outrage. Politicians like Trump are tapping into this sentiment, making Deere's move a national flashpoint. At its core, this is about survival in a globalized world, balancing cost, innovation, and loyalty. The question, can Deere adapt without losing its soul? The answer will shape the future of American manufacturing. For now, the heartland watches, divided and anxious. The stakes? Nothing less than the identity of an American icon. As the dust settles, one thing is clear: the old rules no longer apply. Deere's gamble is a test case for every company facing the same pressures. Will it pay off or backfire? Only time, and the market, will tell. Next, let's see how politics is turning up the heat. Trump wasted no time blasting Deere's move, calling it a betrayal and threatening a 200% tariff on Mexican beer. Why beer? It's a high-profile import, hitting consumers where it hurts and making the issue personal. The message: if companies offshore jobs, everyday Americans will pay more for what they love. For farmers, the threat of new tariffs is alarming. Many still remember the pain from previous trade wars. A 200% tariff would send shockwaves through supply chains, raising costs for countless industries and consumers. Trump's stance is gaining traction, even among some Democrats, fueling a rare bipartisan push to protect U.S. manufacturing. The debate: do tariffs save American jobs, or do they just raise prices and spark retaliation? Supporters say tariffs force companies to keep jobs at home. Critics argue they're a tax on Americans and risk more job losses. Deere is now caught in a political crossfire, every move scrutinized, every decision politicized. The company must weigh market realities against the threat of government action. This isn't just about tractors, it's about the future of American industry. Trump's threats have made Deere a symbol in a much bigger battle. The stakes. Will political pressure force companies to rethink global strategies, or will market forces win out? For now, Deere is a pawn in a high-stakes chess match. The outcome could reshape how American companies do business abroad. The pressure is on, and the world is watching. As the debate rages, Deere's next move could set the tone for an entire industry. The question, can any company navigate this political minefield unscathed? Up next, how Deere's financials are driving these tough choices. Deere's financials tell a tough story, a 35% revenue drop in their latest report. The reason? After a boom in equipment sales, the market is now flooded with high-quality used machines. Farmers, facing tighter margins, are opting for nearly new equipment at lower prices. Deere is competing with its own past success, making new sales harder. This market correction is squeezing profits and forcing tough decisions. Despite the downturn, many investors remain optimistic, seeing this as a cyclical dip, not a death spiral. They're betting on Deere's global strategy and tech investments to drive future growth. Lowering manufacturing costs, like moving to Mexico, helps keep Deere competitive in global markets. If U.S. sales slow, Deere aims to boost exports to South America, Europe, and Asia. Diversifying revenue is key to weathering domestic slumps. The Mexico move is about survival, not abandonment, cutting costs to stay in the game. Investors see a leaner, more global Deere emerging from this storm. The challenge: can Deere pivot fast enough to offset short-term pain with long-term gains? The company's future hinges on executing this strategy while managing backlash at home. It's a balancing act, cutting costs, expanding globally, and keeping stakeholders on board. The revenue drop is real, but so is the potential for a rebound. Deere's next chapter depends on how well it navigates this transition, the stakes survival in a rapidly changing industry. Next, let's look at how technology is reshaping Deere, and the jobs that come with it. Automation is the next frontier. While factories move, Deere is also transforming in the fields, investing billions in automation and AI. The result? Fully autonomous tractors that can work 24/7, guided by GPS and machine learning. These smart machines boost efficiency, cut costs, and promise higher yields for farmers. Tools like See and Spray use AI to target weeds, saving money and reducing environmental impact. For farmers, it's a leap in productivity: faster planting, lower input costs, and better margins. But there's a trade-off: fewer jobs. One person can now oversee a fleet of autonomous tractors. The same automation is coming to Deere's factories, robots replacing repetitive tasks, increasing precision, and reducing labor needs. This is part of a global race: automate or get out-competed. Automation isn't just about replacing workers, it's about keeping the company alive in a high-cost world. The paradox: labor shortages and high costs drive both the move to Mexico and the push for automation. A highly automated U.S. factory could rival a low-wage plant abroad. Deere's strategy is twofold: geographic savings and technological efficiency. Both aim to secure the company's future, but at what cost to workers? The big question: will automation create new, higher-skilled jobs, or just eliminate old ones? Deere is betting on a future of smart machines, but the social impact is just beginning to unfold. The move to Mexico and the rise of automation are two sides of the same coin. Both are responses to relentless economic pressure. The future of work in agriculture and manufacturing is being rewritten in real time. For Deere, survival means embracing change, no matter how uncomfortable. The consequences for workers and communities are profound. As technology advances, the definition of a Deere job is changing forever. Next, let's see how these changes are dividing communities and shaping politics. Deere's decision has split rural America. Some accept the economic reality: global competition demands tough choices. Others feel betrayed, seeing the move as a rejection of the communities that built Deere's legacy. This sense of loss is fueling political action, proposals to restrict contracts and subsidies for companies that offshore jobs. The battle is fierce. Deere and industry groups lobby for global competitiveness, while unions and community advocates fight for local jobs. It's a classic clash: balance sheet logic versus hometown loyalty. The debate goes deeper, touching on the future of rural America itself. Is the answer to fight for old jobs, or to adapt and retrain for new ones? Some back politicians promising to protect domestic industry at all costs. Others argue for embracing change and building new economic models. Deere's move has forced a painful conversation about identity, tradition, and transformation. The company, once a unifying symbol, now represents division and uncertainty. The choices made now will shape the heartland for years to come. The path forward is unclear: fight the tide, or learn to ride it. Communities are divided, but the conversation is necessary. The future of American manufacturing and rural life hangs in the balance. As the debate rages, Deere's story is a microcosm of a nation in transition. Next, the final drive, where tradition meets transformation. We've reached the end, where tradition meets transformation. Deere's move to Mexico is more than a business decision. It's a symbol of the struggle between economic evolution and the pull of American manufacturing roots. The company faces a minefield, balancing global competition with political and public backlash. This story is about more than tractors. It's about the changing contract between companies, workers, and country. Now it's your turn. Should companies be required to manufacture domestically even at a loss? Is automation a threat or a necessity? Who's more in touch with today's economy, Trump with tariffs or Deere with global strategy? Let us know your thoughts in the comments. Thanks for watching. See you next time. Subscribe to the channel for more updates.